Hello everyone, welcome back to our channel.
Hope you have a wonderful day. In today's video, we're going to talk about property.
Yes, a question that we saw on the internet that kind of related to us, and then I think we can answer it.
Yeah.
Yeah.
So this is, I guess, investment property question, as well as PPR question. So if you like this type of content, guys, don't forget to subscribe, comment, guys. That'll be muchly appreciated. So the question goes, I have an investment property that is $250,000 in debt, but it's worth $500,000. I have also principal place of home that is $250,000 in debt. Am I able to refinance property A and use it to pay off my principal place of home? Yes, you can.
I believe so, but depends on how the bank value your property A, which is your investment property.
Yeah.
Because we have done, we did withdraw equity on one of our investment property
To purchase another
investment property.
Yeah.
The bank, well, because we did not cross collateral our property, so the bank did not ask us any question for the new property or the existing property.
They just value it. They looked at the address and valued the property based on the sales figures in that
The market
area.
value. Yeah.
And they look at it, okay, then it would be 80% lend. So our loan goes higher to 80%. And then whatever's on top, you could take it out.
Yeah, correct.
So that's can you pay off that money towards your principal place of home? Yeah, definitely.
I believe so, because there are even people, they withdraw equity from the PPR and then go on holiday or renovation.
Or renovation, or maybe buy investment property, the other way around.
Correct, correct.
So there's nothing stopping them to do this in terms of would it be easy?
Get a bigger loan? Yeah, go for it. Banks love it.
So in bank's point of view, when I was sitting there while you withdraw the equity, I was like, the person was a bit not pushy, more like trying to cross sell you. And go, hey, have you got a credit card? Have you got this? Oh, are you sure it's do you want that amount? Do you want higher? Do you want this and that?
Yeah.
Like in the world of banking, especially mortgage banking, the idea of it is like, I want to lend you as much as I can.
It's just a product, like a normal company. They try to sell you as much as the product they can, because they'll make more money. Why not?
So like if you look at the bigger the loan, the longer the term,
the more
better
profit they will have.
Yeah.
But the only thing, the main thing the bank will look at is, can you borrow that money? Can your rent cover?
Afford?
Can your salary cover all this interest repayment? But I think the bank should totally will lend you the money, but it totally based on the value of your investment property. If you think it's 550, but the bank may think it's 450, they always have different value.
Correct.
Because whatever we are the owner, we always think it's a lot more expensive. Trust me, yes.
And then from their valuations, like they try and be conservative. They try to go, okay, then if tomorrow I have to
sell
liquid,
yes,
what is the lowest figure? Can I go?
Yes.
So that's how I see
the bank be more secure for them, be safe.
And then based on your criteria, your income level, can you service this loan? If you're taking an equity, the repayment wise, are you comfortable with that?
Yep.
And
do you have any other loans? Other loans as well that you're paying? How high is your living expenses?
That's it.
Or maybe when you got those loans, like us, long time ago, no dependent with higher income, they lend it to us. But if we're trying to get a loan now, they may not lend us the same amount. We may be like half of the amount that we could.
Our serviceability goes down the more dependent you have.
Yeah.
Like our borrowing power as well, and depending on what age bracket you're in as well. So like, would that be a good idea? Yes or no?
Well, check with the accountant. We're not financial advisor or accountant, but for tax purposes, I'll say it's a lot better. Yeah. Because you have higher interest to pay in your investment property, which means you can have the negatively geared tax return benefit. For that, check with the accountant.
But in terms of financial well-being, Like
I would say quite the same because he's still owing the same amount.
Yeah, that's the amount. Depending what your end goal is, like why do you want your PPR paid in full, and why not the investment property, or if not, depending your reasoning from it.
Because you can claim tax.
If that aspect of it, then definitely speak with financial your accountant regarding that.
Yes.
I mean, overall, for us, we're in the lifestyle of trying to
pay off
everything, pay off your mortgage. We don't want to just recycle. We don't want to go from one bank to another. We didn't want to go just paying interest only.
Yep.
We try to pay it off as quickly as possible, because the short time of your mortgage, the better it is, because you do not pay more interest
as
to the
much
bank.
as interest. Yeah, ideally is just pay off as soon as you can. I would say pay off your PPL first, and then pay your investment property.
I mean, each to their own.
Yep.
Like for us, that works for us, and the lifestyle that we get from that, as well as the stress level.
Yep.
It is outweigh more compared to my tax return.
Yes, correct. Now, when you see one of our friends, she mentioned that they both, I'll say not very high, but they're higher than average income earner. They got few properties, but they only pay interest. We finance every few years, but then they're not getting any tax return.
In fact, the other way around.
They have to pay even more. I don't understand.
That would make it bitter.
She's very stressful, and because she expects, we'll have this money coming back and that money return coming back, but eventually no, it's all up like $10,000 she has to pay after the lodging her tax and her husband's one. So she's quite stressful.
I would be if you have to pay more than when you're expecting a return, but you're actually paying.
And the tax bracket that what they're on is quite high already.
Yeah, so like depending where you are as well. For us, we don't want to be in a higher tax bracket, or we don't want a higher income earning, let's say.
Yep.
We just try to be frugal,
yep,
relax, stress free. Don't want to work full time.
That's it.
Achieving FIRE as quickly as possible, and having stressless type of lifestyle.
I know. Just go to the beach most of the days.
Yeah, I mean, in the past few days alone, we've just been to the beach and just relaxing.
We're lucky. We just have to drive like 15 minutes and have a nice beach.
So, I mean, to pay it off quite quickly, it's probably the best way, instead of trying to just going from one bank to another, or if not doing
from one loan to another loan.
Correct.
Yeah, just making things too complicated. Well, what happen if in the future your strategy change or some rules change? Depends on the bank, so you have to adjust as well.
Your lifestyle changes as well. What if you started up where you are at the moment? Let's say you're single, no kids, great, but then after that you get married, have kids, and that might change your trajectory on where you're going to go, because that happened to us. We went from no dependent and just buy as much property, and then have two dependent, and now we're just like, I don't want to deal with any mortgages. So our trajectory changes dramatically. What was the plan was, we buy 10 properties,
pay interest only. And wait for 10 years.
Yeah, wait for 10 years.
If you're lucky to hold 10 properties in 10 years.
Selling.
No renovation.
There's
or
renovation.
Anything.
There's no vacancy.
All hypothetically and just not ideal. Not in real world. Anyway, so we got sold with that idea, but it's not realistic. 10 properties, hold it for 10 years. Rent it out. 100% occupancy. No damage.
No breaking down. No problem at all.
No. 10 years. So, and then sell 5 of them, because you will double your money after 7. 100%. No.
Pay off have the profit from that 5 to pay off the
other 5. Correct.
Meanwhile, in that 10 years period, in reality, there's a lot of things happen. Having kids, our trajectory of our life change. From 1 child to 2 child, we stopped working for 7 years. We were eating our saving. Tenant move out, we didn't have any vacancy. Our vacancy was during December when there's a lot of, I guess, downtime for a lot of companies. So most people probably already budgeting. I guess, no, I can't afford to move out at that time, let's say, you know.
I don't know, I feel like having too many investment property is just out of your control.
Yeah.
It's very hard to control, and it's very expensive exercise.
So, and that's the other thing you got to weigh off. Is it worth doing those, those administration tasks to refinance from, you taking out your mortgage or from your investment property and pay it off your PPR? There's bound to be fees involved with that. So that fees might be quite heavy depending on what type of loan that you have.
Anyway, the question was, is the bank going to do it? I'm sure the bank will do it.
I'm sure they would.
If I'm the bank, why not?
I mean, you got to look at it in their point of view. It's like, okay, so you want to borrow bigger amount.
Not really bigger amount. Maybe he go to another bank and he will get a cash back.
Yeah.
That's what they love to do. If you start a new loan with a new bank, we'll give you $3,000 cash back.
But that is the cost of admin or moving from
one they're adding add on interest or whatever to you.
Yeah.
But they did a calculation for sure. The bank is making money. That's why they're willing to give you that cash.
It's
back.
inbuilt. Like that's just the marketing gimmick. It's inbuilt towards your loan. So that's just our 2 cents, guys. So if you like this type of content, don't forget to subscribe, comment.
See you next time.
Bye. Cool. Done.